Thanks.
Yeah. All righty. Well, I'd like to call the meeting to order. Like quick introductions. Start with Byron.
Yeah, Byron Beely, Valley Bank.
Riley.
Riley Hanson, I'm an architect at Slade Architecture and a previous property owner of portable housing.
John.
John Roush, Fire Tower Realty. I don't know, member at large.
Realtor. Chris.
Chris Hunter, I'm former chief of fisheries for the state.
Involved community member. And Stephanie.
Hi, Stephanie Bull, commercial lender at Opportunity Bank.
Very good. And I'm Michael O'Neill. I'm the executive director of the Helena Housing Authority. Very good. Well, thanks everyone for your time today. We'll begin with Kara provide us a copy of the minutes from the April board meeting. I'm not the April, but from the April board meeting. And if anyone wants to make a motion to approve those minutes, I would welcome that.
This is Byron. I'll second them or make a motion.
Yeah, I'll second.
Okay. All those in favor, please say aye.
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 Those
Aye.
opposed? Okay. We'll move through that. And, okay. So regular items. Kara, we'll start with item A. You're going to present some information you gathered about the possibility of different third-party entities that could provide support for loan servicing.
Yeah, so can you guys see this this Word document here?
Only if I get real close, but that's okay. I don't mind getting close. Maybe I should shut my camera off so you don't have to stare at my forehead. But
I was about to comment on the giant forehead in our view.
I could take my hat off and blind you all for about 15 minutes, I suppose.
So I think maybe even just the day after our last meeting, I met with our finance director and our new interim city manager, Tim Burton. And well, I guess let me back up a second. So in talking to our finance department, they were unsure as to whether they really had the experience in-house or the capacity right now to underwrite kind of this really vast array of potential projects. So they asked me to just do a little bit of research and kind of come up with some estimates on what that might look like, what places might be interested in contracting with us and what services they might be able to provide. And so initially I went into this really just kind of hoping to get some cost estimates from different places and kind of realizing as I did that really what we were looking at was this kind of breakdown of services, which I put down here. And so I broke that down as a one-time building out of the application and loan process. So that includes putting together a lot of those documents that you've seen referenced in the guidelines with promissory notes and deed restrictions and things like that, at least templates that we could utilize moving forward. So that would be a one-time kind of effort to put together the infrastructure for that. And then we have the underwriting reviews. So if you guys will remember our last meeting, that kind of was a point of contention or maybe discomfort as far as maybe not feeling super comfortable providing those underwriting reviews within this board. So that was another item that came out. And then the actual underwriting of each loan for each approved project. And then kind of the ongoing servicing and compliance piece for potentially the whole period of affordability, or at least the term of the loan. So those are kind of that's the way that I chose to break down the different services that started to to emerge in these conversations. And so I spoke with a number of organizations, including not on here, but I did speak to Byron and Stephanie just to have some local banks represented. And you guys can correct me if I'm wrong, but I don't know that there's any interest from the banking, the local banks in engaging in this kind of service. I don't know that I know I didn't include anything on here, but I know Byron, it sounded like there wasn't the capacity or the interest either.
No, you've got my, whatever I can offer to it individually, but the
Sure.
bank just has their own system, and I don't think works to do somebody else's.
Gotcha. And I talked to MoFi, which is an organization out of Missoula, who kind of pointed me in the direction of NeighborWorks, and then also Rocky Mountain Development Council, who said they just did not have any capacity to undertake a project like this, but if we were just unable to find anyone to contract with, that they might be able to work something out, but that it would probably involve hiring somebody, at which point I'm not sure that it would be cost effective for us to engage with them. So these are kind of the three organizations anyway that kind of came to the top as being able to provide at least one or more of these services. So
Did you-
NeighborWorks, oh yeah,
Carol,
feel free to jump
yeah.
in too.
Yeah, did you check with MBAC as well?
I did not check with MBAC. That's a great,
Just
and I
a
know,
thought, because I mean, they put together their own loans, they do underwriting, it just wouldn't hurt to call to them to double check.
MBAC, that's a great suggestion.
I had not thought of that. That's
Kara, I just would want to disclose that I'm a longtime board member of NeighborWorks Montana. And
I did know that. Yep.
so but in terms of this type of work throughout the state, and I would also say I have no, not NeighborWorks Montana is a statewide organization of other affordable housing. It's a statewide affordable housing network organization. And one of its primary purposes is to provide a statewide capacity for exactly this type of thing. And so most, say in the home buyer assistance world, 15, 20 years ago, every community might have had their own kind of programs, but most have been consolidated. And though they may have a regional focus, the bones of the operations are through NeighborWorks Montana. They do the loan processing, they do the underwriting, that kind of thing. Part of that grows out of the banking reform after the 2008, 2009 Great Recession, and some changes in what was required and things. So it just required a kind of having a different kind of capacity. And so NeighborWorks does most of that type of work. And they do both single family loan processing and underwriting, and they also do primarily short-term real estate development financing, but also manage, like the state of Montana, all their ARPA housing loans are run through NeighborWorks Montana. Even the state of Montana uses them to process this type of thing. And so in terms of that being their primary business of all these groups, they're the ones that, in the affordable housing community is kind of who does that in Montana. Mountain Plains Equity Group, I work with, but they're primarily a tax credit developer and syndicator. They're not really in the business of making, serving as, these kind of services. And then are you saying, is Anderson Consulting part of Anderson Zermühlen? Is that what you're saying?
Nope. So that's an individual who has a business kind of similar to what Andrew Shinania does. As far as I think he used to actually work at Mountain Plains Equity Group. He has a lot of experience.
Oh, okay.
With
I know who you're
LIHTC
talking
and-
about. Yeah.
Okay.
Yeah. Yeah.
So
And I would say you'd want to be careful. that really to have the capacity that we're really talking about requires, it's not something that an individual really has the capacity to do that. Knowing all the safeguards and the regulatory compliance stuff that NaveWorks Montana has to fulfill, that it's not something you would do with an individual.
Sure. Yeah, so I guess just to kind of back up a little bit, I think NeighborWorks was the only organization that kind of across the board might be able to provide all of these services with the exception of construction loans. It didn't sound like they had any interest really in underwriting construction loans with the amount of interaction necessary during the process. They didn't have the capacity to take on something like that. So certainly that would be an issue if we were to.
They could
to
probably do
contract them.
they could do the underwriting. What I think they probably were saying is that they don't make construction loans, as Byron and Stephanie will tell you. The making of construction loans requires having, having a construction
Yeah,
inspector.
you
I don't
maybe
know
need
what they
another
call it.
column there that says construction monitoring.
Yeah.
Construction monitoring.
Yeah.
Okay.
Because they do, because NeighborWorks does do construction or development loans, and which may be used for construction, but it's usually it's not a traditional construction loan. They don't monitor the construction. It's usually there's guarantees, either the collaterals or other guarantees separate from the deal. They don't monitor construction.
So that would be like a third party that would do that, or is like how have you seen that happen in the past, I guess? Or maybe Stephanie, it sounded like maybe you had some.
Yeah, like for mortgages, we have a separate department that does construction monitoring.
Okay.
That the loan wouldn't necessarily, generally in a lot of affordable housing, there'd be construction financing, probably usually from a commercial lender or other, and that the affordable loans come in and take that out at permanent close, would be a common structure. Or if it's a pre-development loan, that it isn't necessarily tied to the construction, that there'd be some other that your collateral wouldn't be the actual phases of the construction, that you'd be putting dollars in, and that there'd be other guarantees made to back them up. But generally, probably for something like what we're talking about here, is that it would probably come in at permanent. I know Byron's been involved in a number of these type of deals.
But when I've done a loan out that we haven't used our own department to go out and inspect it, we've had a full commercial appraiser that's done the appraisal of the project, and then they will go out when we get in advance and verify what has been done. So it's kind of a checks and balance to kind of visit the site. So that might be an option, but it can't be, has to be a full appraiser usually that does that.
Okay. So I guess the only other thing to note here, excuse me, I'm kind of getting over a sinus infection right now. So again, Anderson Consulting Services was only interested in the building out the application process, so that one-time kind of effort there. And they're not available throughout the year to do underwriting reviews or project underwriting. And then Mountain Plains Equity Group only was interested in underwriting reviews. And I actually just checked in with them again this morning, and they gave me an estimate of $5,000 per review, which is, I think, probably not doable for the city, just considering the total amount of funding that we're working with and what, potentially each project might look like. But again, I think what they there might be some wiggle room there as far as maybe abbreviating their process a little bit. So they were talking about potentially giving like a couple pages of opinion on each of that pro forma bullet point, each of those bullet points in the pro forma section of the guidelines. So I think what they would provide would certainly be really nice to have, but at that price point, probably not feasible. So we'll probably be having another conversation with them after we check back in with the finance department. But and then I put the city of Helena on here as well, just thinking that if we were able to get all the paperwork in place, if we found someone to do underwriting reviews, maybe we could revisit this conversation in-house, and maybe they might be more willing to do the actual loan underwriting and servicing, maybe feel a little bit more comfortable with that. So I'm not sure where that is right now. That's very much up in the air, but just wanted to give you guys a little bit of an idea. I think we probably will be moving forward in the next few months with making some decisions as to the direction there, but certainly wanted to get your guys' opinion. And then ultimately that will end up going to the commission for some final decisions. But do you guys have any thoughts on that other than what's already been voiced?
This is Byron. This Neighborhood Works sure looks like the hands down choice that we should go with. They'd be better than MBAC as well, even if you talk to them. They're qualified, it looks like, in all aspects, and just would be the construction part.
Mm-hmm.
If people want to look them up, it's nwmt.org, and you can see their whole array, but it's basically a big part of why they exist is to provide this capacity to the affordable housing community across the state of Montana, among other things they do. NeighborWorks is the umbrella organization on which like all home buyer education for the most part in the state takes place, in housing counseling and the kind of systems in place now for emergency rental assistance, counseling, those type of activities are all under the NeighborWorks Montana dwelling. They have a whole variety of affordable home ownership loans, home buyer assistance, and then they do they're involved in community resident-owned communities of manufactured housing, that they help organize them and finance them and bring them into being. And so very interesting, involved kind of at the central, a key, that the affordable housing community, we all work in conjunction, with a whole variety of folks on that work with NeighborWorks throughout the state.
Just to piggyback on all of that, it seems like we've worked pretty hard up to this point to stay as, agile or flexible as we possibly can with how things might move forward, depending on what some particular group's needs might be. And to that end, you're going to want somebody who's going to be equally agile in being able to provide the services that could vary a little bit from project to project all the way across the board. And NeighborWorks is, they've been at it for a while, so they know what they're doing. So I have no heartburn at all about, not spending a lot of time working to find a different solution when we've got a really pretty good one right in front of us.
And I guess too, the other thing to note here is that we already have a contract with them for another program. So we have the home renewal program, which is funded through the Commerce's Community Development Block Grant, and we're contracting with them to do underwriting for that one currently. So yeah, certainly in their wheelhouse to do all of, I think, the services that are listed out in the guidelines as well.
So as
Um,
part of that process, Kara, will be determining, certain things, the detailed underwriting that, we think of, that Byron and Stephanie will be very familiar with in terms of large transactions, requires a certain level of sophistication and complexity, but the underwriting of like first-time home buyer mortgage is much simpler kind of process. It still requires expertise, but it's so and so the cost will be associated, different, but it won't be in that $5,000 range that you got on this, and that would have to be part of kind of a detail to be worked out in terms of the financing. Usually you build that into the terms of the loan, that the cost of the transaction, so it wouldn't necessarily it'd be kind of financed in that loan. All right.
Gotcha. Well, I think that's all I had.
Well, thanks for bringing that forward, Kara. Any questions from the board in terms of that? Really good comments.
Do you need a motion? Do you need any particular action other than to just encourage you to continue to pursue it? And
I don't think we need a
No.
motion at this point. I guess it's possible in a future meeting, but I don't think at this point we do. We're still researching, and I'll have to go to the commission here probably in the next, I think probably month or so to get a little further direction as well.
I think it was just informational as they're
Mhm.
looking at that. So once we up and running, what would want to look at, as a possible need? That I think what you're telling us, Kara, is that in terms of most of the operation of the fund, that it required third-party expertise, outside expertise to manage it, and it's not going to be an in-house city activity. And I think that's wise.
Yep.
Yeah. And so thank you. So next up is the program guidelines. Do you know where we left off exactly, Kara?
So we had finished doing, I think, the bulk of the we got down to maybe the advisory board section, and I guess I wanted to just kind of go back through and just kind of hit the main edits that have happened, and then we can kind of continue on. And ideally, I mean, obviously this is, up to you guys and what we maybe have time for today, but it'd be wonderful to be able to get through these two items. And then my hope is that here in the next couple of weeks, we can really move on my end to like the legal review and getting this in front of the commission. So that'll, be its own process, but so I'll just kind of go over and let me know, feel free to jump in at any point if what you're hearing isn't what you felt like you said during a previous meeting, or if you feel like you have any comments, but so Andrew did add, yeah.
is it possible to, on your screen, I don't know exactly how screen sharing works, but yeah, can you make that bigger and make our pictures a lot smaller?
I don't think I can do anything about your pictures. You might be able to maybe kind of minimize that, but can you see, is the
John,
Word
there's
doc
like
a
a-
little more readable?
There's a little line actually between the pictures on the side and the actual sharing screen. You could,
So I get to
Drag that all the
manipulate.
way
Ah,
over.
look at that.
There you go.
Brilliant. Thank you.
Does that look better, John?
Way more better.
Awesome.
I can see this from Cleveland now. This is great.
So Andrew did add just a little bit of, I guess, maybe context into the introduction as far as what the need in Helena is and where this fund came from. So citing that resolution. And I think that actually came from a meeting, maybe even like one of the first initial meetings that we had. Let's see. So So this eligible uses section, I think Stephanie had mentioned this, had questioned whether this donate section needed to be in there. And just to revisit that, it's in there in the event that the city acquires land and has may at that point have the option to donate it to a nonprofit or agency that might turn it into affordable housing. But I think just to reflect verbatim what's in the resolution, and then cover that possibility should it occur. If we were to change any of this language here, it sounds like it actually would be a revision. Like we would have to go back to the commission and revise the resolution, which I think we want to avoid at all cost. But yeah, that does cover us in the event that we were to acquire land like that could be repurposed. And then the eligible beneficiaries section, I know we spent a little bit of time just talking about that language. And so if you guys haven't had a chance to really review that, it's been rewritten to include that 0 to 80 instead of, I think it was a little unclear as to whether it went up to 80% or what that income bracket was. And so that part's been rewritten. And then also I think it's a little bit more clear that, this fund serves 0 to 80 and then can also go up to 120, depending on the approval of the advisory board and the commission. So that section was rewritten a little bit. And then we decided to keep the reference to the multifamily tax subsidy income limits, just that they're not substantially different than the home income limits that I think Michael had thought might be more widely known. But we did think like once the information is posted on our website and once the request for proposals goes up, that could definitely be a kind of a supporting document or something to add in there just so people can easily reference it and not have to go digging around for that information. And again, feel free to just jump in if you have any comments as I go through here. We did add just kind of a reference to that Fair Housing Act in that opening section of the building standards and accessibility. I think there've been a couple comments about that during our last meeting. And then adding in there that exception on new projects. This, I guess, is kind of maybe still up in the air, but my last conversation with Andrew, we decided to leave this in here as it's not about, I think we talked about referring to the energy efficiency sorry, I'm spacing here, let me get the application out, the energy efficiency priority in the application. And this is really just about those building standards. And so I think keeping that in this section probably makes sense. And then just, referring people to the application if they're interested in the priorities for the fund.
Now, Kara, this environmental analysis requirement should be clarified, would only apply to certain types of projects. It wouldn't apply to, say, home buyer assistance or things.
Yeah, good point.
Of that nature. So I just somehow it should be, the way it's reading is saying that every loan would have to have a phase 1 environmental study would be not appropriate for certain types of things. Of course, a phase 1 would be necessary for, any large project would already have that, and they would just give us a copy of it.
In agreement, and to further elaborate on that, those are of course typically used for whenever new construction occurs where you are creating more impermeable surface area, which typically if we're doing an exterior extension and or new construction, I think that is most specifically geared towards that. Now, as Michael had stated, of course, if we are assisting first-time home buyers and or just doing strictly interior renovations that wouldn't necessarily need one of these environmental site analyses. So maybe add some language, aiming somewhere for exterior work, new additional exterior work or something along those lines.
Or as appropriate in keeping with standard industries, with industry standards.
Yeah.
Gotcha. That makes sense. Let's see, I think with the period of affordability section, I know we talked about maybe thinking about some of these time periods on a per unit basis instead of on the total amount invested. I know Andrew ran a couple different like kind of scenarios and started to get real complex really quickly. And I just for simplicity's sake, I think having this reflect the total investment from the fund makes the most sense. And again, I guess I'll just kind of have to see as we start seeing some of these applications, but excuse me, a lot of these projects will be having to comply with periods of affordability through their main funding source, and this may not be as restrictive as those would be. So if anyone, I don't know, feels differently, but that's kind of where we landed, is just not wanting this, any requirement to apply for this funding to be a barrier, wanting this to be as easy as possible in the interest of having it really fulfill that gap financing goal for people. That's where we land.
Can I just back up a sec? I had my darn thing on mute on that phase one. When we do a project, we'll do a transaction screen and it'll rate that property 1 to 5. And if it's up in that 5 range, maybe there was a gas station or something history on it. And sometimes that triggers the phase one, but if it comes back a 1 or a 2, we don't require a phase one. So I think, the phase one is expensive. And so I don't know about always requiring it if it's not needed.
Gotcha.
Now, some projects maybe with other funds and stuff in place, maybe those require it. So I guess it's a case by case. But
what do you
it's fine.
utilize? Like, what are you using some kind of platform to like mapping platform or something to
this
determine
transaction screen is it's a service that's available. You can go into and pull up the environmental report on it.
I assume that's something you pay some subscription
Yeah,
service
but
for.
it's maybe $150, where a phase one could be, they got to do soil samples. It can be quite a lot more expensive, but some cases that's required. But
Well, hold up. I mean, typically there's about 3 phases. I think there's
Yeah.
3 phases of environmental
Yeah.
site analysis. And typically they don't get into soil samples from what I understand in just phase one. That typically comes after, I think, phase 2.
yeah, you're probably right.
I think phase 1 is just the very kind of light, like doing research, like has there ever been a gas station on site? If yes, that will trigger the phase 2. But the phase 1 is the real light kind of environmental site analysis. So I think that's what you're thinking, is that it's getting up into that phase 2 and phase 3 range
Yeah.
that it starts getting expensive and intrusive.
There will be projects that wouldn't require, but it's the nature of the project itself rather than, so like, as we discussed, home buyer assistance, just renovations of an existing building, those kind of things wouldn't trigger that. Okay. I forget, what did we set as a per unit cap? Where would we have that?
I think we talked about a per unit cap for the land trust grants. And then I think for homebuyer assistance, we don't have a cap in here, but had talked about it maybe reflecting the same or being the same amount that, so right now it's 10,000 per unit for a land trust grant. And we talked about that being similar for the homebuyer assistance.
And would we have a similar cap per unit for rental development or preservation?
I guess that's a good question. We haven't talked about there being a cap per unit. Definitely write that in my notes here.
Yeah, just the affordability made me think of that. Are we consistent with how we're treating different housing activities? Okay.
Let's see here. Let me get back on my notes. So just like, I guess maybe some more just kind of language edits to make it flow a little bit more smoothly. I don't think we really had a ton of changes in this section. And the next thing I have on my list here is just addressing that we talked about cost certifications for single family housing. And kind of what I did talk to Jacob at Habitat. And one of the things he said is that, you know, maybe it's not like an official cost certification that you might see with like LIHTC or one of those kind of programs, but there's certainly going to be like a sources and uses kind of check at the end of each project. And Andrew kind of confirmed that as well. I was trying to find the actual section in here. That we certainly don't want to remove any language like that. Just that we want to, we will want to have that kind of compliance review throughout the project, and then certainly at the end as well. So yeah, so I guess it will look different, but definitely don't want to remove that language.
Yeah, just the cost certification is a specific thing that involves,
Mm-hmm.
you know, a specific consultant, and that just isn't done, you know, but you want to have some process for determining that the funds were actually used for the stated purpose.
Yep. I guess we already kind of covered this, but and this needs a little bit of clarification in here, but no grant for a land trust acquisition per unit can exceed $10,000. And we did just kind of talk about maybe that number maybe could be higher. And those are the kind of things, obviously, as we get into projects in the next few years, like maybe those kind of things could change. Maybe that's the kind of thing that we go back in our annual review of these documents, and if, you know, decide that it wasn't useful at that rate. And we'll get into this later in the application, but the way it's written in the application is that there is a $250,000 set aside for land trust acquisition. And so if an entity applies for that and is approved for that funding, they'll have access to that $250,000 for a 3-year period. So think about being able to access $10,000 per unit for a 3-year period. So that's kind of what that was.
What's this set aside?
So that's in the application, and I can toggle over to that when we're done with this one, but it's the only set aside in our fund. I guess technically there's the $100 or $100,000 set aside for emergencies, and then there's a $250,000 set aside for land trust acquisition grants.
And that was determined where?
That's in the application. So they kind of reference it here, but it's spelled out a little bit more clearly in the
But
application.
where was that determined?
Oh, at what point? This is, so like in our initial talks with partners, that would have been like end of last summer. I think we were having some of those conversations. So that the application actually hasn't changed since those initial conversations.
Well, the application needs to jive with the guidelines.
Yep,
And so-
absolutely. And that's something, when we go through that, we can kind of see where it hasn't been updated. I just recently got
Well,
this back.
It just, a number of meetings ago when we kind of did a reset, I was kind of thinking that we're trying to establish this kind of an equal footing, that we don't know what we don't know, basically, and that we want to be open to projects of a whole variety of types that would address the whole spectrum of challenging, to meet these challenges that we're facing with housing conditions in our area. So with the set aside business, it presupposes outcomes that we didn't, this board hasn't approved of yet.
Sure. And I mean, I guess without that set aside, an entity could still apply for that
Yes.
project without it being detailed out like that in the application.
Yeah, no, that's an eligible activity. Certainly would be, one that we would welcome. But that
Mhm.
the set aside means that we're carving out, at the beginning where the money's going, rather
Right.
than allowing the projects to come forward.
Let's see, I think that's all I had on the land trust section. And then the other item I know we spent a little bit of time talking about was just to get back to that underwriting review. So basically we just took out each member will provide their own underwriting review per project, and kind of felt like these bullet points listed out here were more feasible without that that language at the beginning. So I don't know how you guys feel. That was kind of my one thing where I thought, you might have a little bit more feedback here as far as whether that reads as doable, given that along with these applications, you will now most likely be receiving an underwriting review that kind of walks you through whether or not, the financials of the project make sense and are in line with what's laid out in the guidelines.
I think it's more appropriate to say that the board will review applications to ensure that all of us comprising the board will do that together. It's not each of us will do
I
the second.
just wonder that one sentence that's right above recipient requirements, if that would just be up above there, because that's what it says is we'll review all applications. That's what we're gonna, as a board, do it.
Where are you reading, Byron?
Well, just below where this says advisory committee board it says also review, so maybe it's a little different there. I thought it was saying the same thing, but maybe that's review and other things within it.
Yeah, so that'd kind of be on top of what
Yeah,
okay.
this
section here.
But
Yeah, no, I
now,
agree, Michael, as far as the
I would just say
board versus
replace each member
individual.
with the board. The board will review applications to ensure. Which also clarifies there's a central part of public governance of public boards that none of us have individual authority. We have an authority and a responsibility as a board. So in acting together. Yeah.
Okay, so that's actually the last kind of, I think, major edit that we made. I did add in, just in these other considerations, items that applicants will want to consider. I added in our Tri-County Housing Needs Assessment, the 2019 growth policy, and then just the TIF district information that's included in the resolution. So those are all items that people are, going to want to consider or be familiar with when they're applying to this fund. Let me roll back up to. So yeah, I'll just leave it there with the major edits that were made. If you want to jump in from this point, we can do that, or however you want to approach that, Michael.
Okay, let's walk through the rest of it and okay.
Oh, maybe we lost Chris here.
So in terms of Chris is coming back.
So yeah, from this point on, I think it kind of details out some of the requirements of applicants after they receive funding.
Okay. As we roll through, if you see something, just jump out, say stop, or if you have a comment.
So this is something, I guess, to just as it came up in one of our conversations with NeighborWorks, talking about our ongoing compliance. We're certainly doing annual compliance checks. That I think there was a misunderstanding that we were doing kind of ongoing compliance, which we're not interested in doing that, but just an annual check-in for the duration of the period of affordability. Then it lists out here a little bit more based on what we would need while a project is in construction, and then upon completion, what kind of items we would need from the organization.
Yeah. Some of this may require some reshaping related to, what's written is more applicable to a larger multifamily rental development, or even, I guess it could be but that, so there's different ways. So like on home buyer assistance, what you generally would be checking on is that the original owner is still, with home ownership, you aren't necessarily expecting them to continue to be at the eligible income, but they would, that this original owner there, and that it hasn't been converted into some other ineligible use. Like if you are getting home buyer assistance, you can't then convert it to a rental, for example. And if it's sold, the deed restriction stuff should trigger, but that's one of the things occasionally happens that the title companies miss it. So that's involved in. I've seen some of those transactions where, and that's, I think, what title insurance is for, right? But yeah, this doesn't necessarily cover all types of activities. So these are all would be standard in rental developments that you would have. And I think the thinking is you would accept, or the original intent, I think, was to accept other standard annual compliance. So in lieu of the city requiring, that you wouldn't have to generate all new documents that, on a tax credit, you would accept or home funded or whatever, that you would accept the compliance documents and the certifications provided by, the major funder or something.
Yep, exactly.
But there may need to be some work done on there just to make it applicable to different activities.
Okay. If I can make a note of that, Michael.
Okay.
I guess that really is just kind of the end of it there with the request for funds and then that other considerations section that we already went over. So yeah, let me know. I can scroll back up. We can hit other areas if you'd like to. Let's maybe give some space for comment here as well.
Any further comments, questions? We ready to switch over to the application?
Yes.
Very good.
Yeah.
Yeah, I'm good.
Well, nice work, folks. We'll probably have this come back to us one more time just to give a final. And because we probably aren't gonna have to align some things with the application, but we'll probably see it at least once more before we would act on it.
Yes, I can send you, I'll call Andrew after this and just see how soon he could turn a copy around, and then the application I think will need a little bit more work just as far as it has not been updated. So there's a little bit of some dated language in here that we'll have to kind of disregard because hasn't been
Well, just-
updated to that most recent version of the guidelines.
Yeah, the guidelines is the overarching document. And so we need, when we go through the application, if we see things in the application, we'll want to either strike them or make sure that the guidelines are consistent with them.
And I know some of this we did kind of touch on maybe in the March meeting, but we're still planning to have 2 application rounds, one in the winter and then one in the spring. So obviously these dates would have to be updated depending on when we open our first round of funding.
Hey, Kara, can you expand your screen? It's not,
Oh, I'm sorry.
it doesn't have what you previously.
Can you see
had.
the application schedule right now?
Now we can. Yeah.
Perfect.
Yeah.
So yeah, we'd have to update these dates depending on when we release our first round of funding. We have our priorities listed out below. That's what I was.
I don't know if you want, so your plan is that you'll issue a new application every year with different calendar attached, or?
I mean, these are, I guess, this application would probably stay pretty similar, and maybe even like take out this date section and just have, when we release the request for proposals, have this more detailed set of dates in there specific to that round of funding.
Again, so we're setting I mean, I guess it raises the question of certain activities we only want to, I mean, it's not an ongoing funding cycle. It's only going to be. So is the intent to have, there may be competitive, to have competitive projects going against each other in these rounds?
I think that's very likely.
Okay. Versus like, not all projects come together, you know, that the projects will have to meet our schedule rather than it's not an open process, open-ended process. Okay.
Yep.
Does that make sense to folks, or what do we think of that?
I don't know, I don't know enough about the actual workload involved in the review process to really worry. But if the anticipation is that we're gonna have a bulk of things to deal with semi-annually, and it makes perfect sense that we would want to divide it or, you know, sort of manage our funding cycle that way. On the flip side, if we're not getting, we're not expecting to generate a whole bunch of applications, I guess I don't really have any fear of reviewing them as they come in, but maybe it's safer to do it this way, at least to start with.
To start with.
Well, I think it puts all the applications in where you can look at them at once versus one or two a month. Because you're going to approve some and you might not be able to approve them all. So it just, if people know ahead of time they've got a deadline, and if they miss the fall one, they can do it in the spring.
Yeah, and if the funding available isn't sufficient to fund, you know, say there are 3 qualified projects in the fall and only 2 of them actually can be funded at one given moment. If at that point you can tell somebody, look, you know, we do this every 6 months, and if you want to wait, we know what we're going to be looking at budget-wise 6 months from now, we'd recommend you wait. I guess that makes sense to be able to do that too.
Right.
Otherwise, we're just going to always be out of money, I guess. You know, if we're just on a rolling basis, does this qualify? Doesn't it qualify? Okay, I guess we fund it. And then it won't take very long to not be in a position where you actually have to choose between projects, but you have to choose which projects you actually approve or don't approve.
And I generally, when it comes to affordable housing, you don't have enough resource to match all the applications.
All the demand, right?
So the question I have is just the way it's currently presented. I don't think it's a split. I think it should be a clean 6-month cycle. I think rather than being off. And I don't know if you want, whether or not you want to put out a new application every year, or this statement should. I like the way you break out that there'll be steps within the application process, whether or not you want to just leave it in rather than, you know, that the application deadlines will be scheduled, will be announced well in advance, and that it would be, but generally it's going to be a cycle that you know, they basically, whatever you laid out they should be 6 months apart, so that it doesn't, one end of the year isn't you know, that it also breaks up the workload for the city and for this board.
It is interesting to me, looking at the dates that are, you know, that we're going to have to adjust anyway, because, you know, we're behind them. But the first cycle is a 2-month cycle, November 1 to the end of December. And the second one is a 3-month cycle.
Yeah.
Is there a particular need for that?
That might just be an error.
That's what I'm talking about. Just, you want to have the cycles the same, and you want to set them up in a even, make it sure that it's even, that the process is equally distributed on the calendar.
Yeah,
Should
and
both start dates be 6 months apart? Sorry.
Well, they're not now.
They
Because they're
could
not
be.
now.
I think that's what I'm hearing is that even 6 months would make more sense.
And I'm in agreement with both what John and Michael are saying in regards to doing the biannual cycle in terms of, if we do just allow applications year round, we'll pretty much spend every dang month looking over them, where I think it'll be easier for us to schedule and coordinate if we do stick to the 6-month cycle. And then just my thoughts on at least including with the application would either be to just choose dates regardless of year. And then if that falls on a weekend, maybe we just say, go to the next Monday, or we separate out a different sheet, just stating, the dates of that fiscal year. And that is unless we intend on, I guess, making tweaks and revisions to this general application every year. I just think it would be cleaner if we pulled the schedule out as a separate sheet, just to make it easier for us to update it for successive years.
Yeah, I think that makes a lot of sense. And too, some of these dates are going to be like this city commission makes funding decision really has to happen at a commission meeting. And those are,
Right.
I guess, scheduled pretty far in advance, but some of that will have to line up. So yeah, do you think that makes sense to pull it out and just have?
I think I think you can make this a generic schedule that would fit any calendar year. Say, that there'll be 2 application cycles per year, one, whatever, beginning March 1st or whatever the date is, and then lay out that these phases will be in there. And you may want to look at, some of them may be a little tight in terms of what you're asking people to do. Like if you have to make a correction, whether it's having 4 days notice or something is enough time. The one question I have generally about the application process is what we see in some, do we want an application process when all potential applications in the round would submit full applications, or do we want to have some sort of process where we would have a preliminary? So like in the tax credit application process, there's a process where there's initial letter of intent, and the letters of intent are submitted, and the Board of Housing reviews them, and that's a lot less work, but it lays out the scope and scale, and you're committing to a certain type of project, and that's reviewed, and based on the letter of intent, the board will then invite for just that funding round, a full and complete application. That doesn't mean everyone that's being invited to complete an application will be funded, but it eliminates a little bit of folks having to complete a full detailed application. And I think this is a question for us when we're done looking at the whole application, what we're asking of groups. Are we gonna, it might be just something to reflect on and think back and again, it would only be for the funding cycle. We wouldn't be necessarily, it might be part of the letter of intent, or that kind of process is also looking at the readiness of the project and all the pieces there, and it'd be a preliminary review that we would be giving feedback and saying, okay, these are ready to go for a full review and are moving forward in this round's funding cycle. Others, we might say, would be, denied it for that funding cycle and move. Are you going over here? Okay, tell them that I'll be there at 3:30. Yep. So let's postpone that, but it just in terms of having, being on the side of where you're writing applications, that sometimes you can early on in the process, if people aren't quite ready for it, it's a kindness to say, we're doing this again in 6 months, do this and this and this, and come back or something. But But you see that in some processes. It's just it's something to think about. Okay, do you want to move through? I think we probably the calendar.
We've talked about priorities before. Are there any further comments on this section?
Yeah, like I have said before, I'd like to see something more specific about energy efficiency and that sort of thing included. It's fairly vague right now, the last one.
So we can certainly propose some language around that. And I think let's see, projects that further the city's environmental and sustainability goals. So I did pull out, this is from I think from the growth policy. So we have a couple bullet points. Let's see, this one says promote energy efficiency and the use of renewable energy in new and existing development, minimizing impacts on natural resources and the environment through measures including as appropriate. And then it has a couple different bullet points, which I think development standards are maybe the only one that maybe applies to this, but I don't know if that is maybe a little bit more specific.
I think
But
the
again,
first was-
sorry, go ahead, Chris.
I thought the first one that you read was a little more specific.
Sure. So we could definitely propose that in there instead. I think I was going to follow up and just say if we propose something different than what's in some of these already approved city documents, I think there might be a little bit more pushback from our legal department, but
Sure.
so that's certainly something we could add in there.
Kara, these priorities, I think they're stated in the guideline, but this really this should be in the guideline.
It should be, but they're not.
Yeah, this should be moved to the guideline.
Gotcha. Yep, we can definitely put that in there.
And then the application should be eliciting information related to this. So
I agree, because, you know, like you said before, if the guidelines are the overarching document that directs the whole program, then I think the priorities should be there. Yeah.
Okay. Let's see, we talked about this a little bit when we were talking about the community land trust, but this is that section that, yeah, I guess perhaps now maybe it's maybe not as appropriate to have this in there. So this is where it lays out that set aside of, if this amount could be different. This is what I think Sharon just maybe pop these numbers in here as some beginning ones to some placeholder numbers, but this $250,000 set aside would be for organizations applying to acquire land for single family housing that would eventually end up in a land trust. And that would
Kara,
be
just this would be in the guidelines, and if we would have to agree that we want to do a set aside, which is a big kind of question, because we had that whole conversation about we were trying to, 3 months ago about wanting to establish kind of, we weren't one way or the other saying what the projects would be, and so by doing a set aside, that's a decision for the board, but it would go into the guideline, not in the application.
gotcha.
So I mean, I think that needs to be a discussion point, maybe a separate agenda item. Do we want to do set aside within? That's a major decision point for the board to make in making a recommendation that do we want to do set asides. And I had kind of thought we had moved on from that, so that's why I was asking the question earlier. It's like,
Well, Well, and I guess we haven't revisited this part of the application since we expanded the eligible uses of the fund. And so I think
But
this
the,
was, had been developed with those much more limited scope of eligible uses. And so I think, I mean, I don't know that it's as,
the guidelines contain the guidelines, and this is a guideline. This is, so if it's gonna be in part of the program, it needs to be in the guidelines. And then the application, so the focuses on eliciting the information on which the guidelines are basically laying out the criteria and all that, and then the application is eliciting the information we need to evaluate it according to the guidelines that have been established in the guidelines. We don't establish the guidelines and then have a whole other set of criteria in the application. Do you understand how that has to? Because otherwise we have a separate set of guidelines.
right. Yeah, no, I hear you.
Yeah, okay.
Just it was confusing.
Well, I think that makes sense. Definitely revisit this section then, and then the priorities as well about moving that location.
There's a typo in that first paragraph too, just for reference. Where your cursor is, additional funds will be allocated to the set aside of if.
Oh, right, yeah. Yeah, I think I have that written down in a paper copy of it. Yeah, thank you.
And again, I think it would be the same kind of issue that the city attorney identified, that it would be out of, the resolution was broad and this narrows it. I
Right.
apologize. I'm gonna have to step off. I have a room full of people waiting for me. But I'll thank you everyone for your great involvement today. Really meaty conversation. So I'll see you at the next meeting. Thanks.
Thanks,
Good to see you,
Michael.
Michael.
Yeah. Bye-bye.
Take care.
Well, I can step in here and just kind of, we can move through these last few sections, unless, John, I don't know if you're interested in.
No, life is good. Let's just
Perfect.
muscle through it and get it done. That's great.
So the rest of this kind of just details out the review process for the applicants. And so there'd be that initial city staff review, just to determine whether it aligns with our program guidelines and whether whether it's an eligible ask. And then kind of that, I guess, that initial determination as to whether there's other funding sources and things like that. So if it's just a very initial review by city staff, and then a little bit of detail on that advisory board review as well. And I think it was kind of our first priority to get those guidelines done. And I think some of this is going to change a little bit given the changes made to that section of the guidelines.
I was gonna say, if we're being nitpicky about calling ourselves the board and the guidelines, we should probably follow suit and refer to ourselves.
Right.
Here.
Yeah.
Yeah. So yeah, we'll do some
Any
edits like
board.
that for sure.
Yeah. Kara, do you think it's useful for us to even really be spending much of our time on this right now? If you think a lot of it's going to get tweaked and adjusted in the near future?
Well, I guess, how about this, just because we only have a few minutes left here, what I'll do is I'm going to take the guidelines back to Andrew and we'll just kind of workshop some of those items that came up today. And then I'd like to send out the updated version of that, and then we'll comb through here as well, and I'll send this document out. And I'll do those both in Word format. And if you have time, I would love for you to just kind of go through there and highlight anything that you feel like is still maybe an outstanding item to correct, or like that, some of those grammatical things as well. So how about I'll do that. And
Where does
And-
the third party underwriting step fit in there?
Yeah,
that
so
be-
it'll kind of be peppered in through here, I think. And so like, depending, if we have those, we'll have to provide another bullet point here, I think, just
That's-
whatever the organization is, underwriting review provided to the advisory board.
Letter 6,
Yep.
Yeah,
Roman numeral 6, yeah.
Yep. So yeah, and that's a good point too. Some of these things we have that kind of happening simultaneously that we'll need to weave into this document. So yeah, hopefully, so I'll get the meeting minutes done for this, and as soon as we get that updated copy of the guidelines in this document done, I'll send that out to you guys. And I was also, just before we end here, just wanted to let you know I'll be gone for the June meeting. But we have our admin person, April, said she's willing to step in and just kind of host it as long as you guys are okay with that. And we can do a little bit more communicating prior to the meeting as well. But if you guys have those updated documents in front of you, that might be a good meeting to really finalize that or vote on it.
No.
So, do you guys have any other further thoughts you'd like to add in here before we close out?
Are we required to take public comment?
We are, yep, we can move on to that.
I don't know if there's any, I don't think anybody actually is on.
I don't think so either. Stephanie, that's
but
your phone
I don't want
number,
you to
I
close the
think.
meeting without actually having done
Right,
it.
I'm on.
Yeah.
right.
Perfect.
Yeah, okay.
Yeah. Is there any public comment at this time? Going, gone? Let me just run back to our agenda really quick. So the only other, I forgot to update that next meeting date, and so that's going to be June 1st will be our next month's meeting.
That's the one you're missing?
It is, yep.
Okay.
Well, if there's no other comments, we can go ahead and adjourn. Thank you all. I really appreciate your time today. I'll get you those documents here just as soon as possible.
Sounds good.
very good. Thank you.
Sounds awesome. Thanks,
Thank
everybody.
you, everyone.
Thank you.
Good to
See
see
you
you all
next-
again.
Yeah.
I'm going to be upstairs at the 10 Mile Creek Brewery here in about half an hour or so. If anybody wants a beer, I'll buy the first beer.
Sounds great. All right. Bye, you guys.
All right. Thanks.